Thank you everyone for coming. I just heard that there are 400 people still online, and we have about 50 here in the room. And the content of this snippet will be broadcasted later on YouTube. So we're very glad to hear. You're here for the best section of the 3 days. So you can tell me in 30 minutes if I overpromised or not. I've had the pleasure of working in the venture capital industry for over 20 years now. And during this time, I witnessed quite a few technology changes. I mean, you had the PCs, you had the internet, you had mobile revolution, and now it's blockchain. And it's amazing what every technical advancement has done to forward society, to bring about change. And it's quite amazing what kind of creativity and innovation it has unleashed. So the job of a venture capitalist, we like to believe, is to facilitate the emergence of these new technologies with well-placed bets on carefully selected founders and their business models. Now, VCs are often very wrong, especially at an early stage. But when they are right, they are often spectacularly right. And the success of a single startup can forget the 90% of the founders that you backed that didn't make it, at least when you backed them. Now, venture capitalists have their own personal methods to evaluate the success of a young startup at an early stage. And the rules are quite different in the crypto space compared to the internet and the mobile days in the 0 years. And it's always great to compare notes with venture capital colleagues. That's why I'm delighted tonight to welcome 5 esteemed colleagues from the VC space to talk about well-kept secrets of venture capital investing in the crypto space. Now, let me just give you a quick introduction. I have to see who's sitting. I'll start with Olaf. Olaf Hannemann is the co-founder and chief investment officer of CVVC. He's a veteran investment banker, having worked at JP Morgan, I think, for over 20 years, if I'm not mistaken, in a number of different roles in corporate banking, finance, and industrial advisory. And he's also been a founder himself twice. Now, Patrick, to my left, you discovered crypto in 2016, and you were immediately intrigued by the potential of this new technology. You're also a serial entrepreneur, and most recently, the founder of Tioga Capital, a European blockchain VC. Thank you for being here tonight. We have Simon, who has been deeply engaged in the crypto ecosystem for a while now, and amongst others, you have organized Europe's biggest blockchain hackathon, ETH Berlin, at that time in 2018-19. He's an entrepreneur and business angel, and you built multiple businesses yourself. You're also a partner at Possible Ventures, supporting founders that build companies benefiting people and the planet. Now, thank you very much. Back in Berlin, we have Elad Verbin. Hello, Elad. You used to be a computer science professor, and everybody will agree you still look like one, and I mean this in a very positive sense. You have also led machine learning at a hedge fund, predicting the stock market. You got into crypto in 2016 when you started working with the Ethereum Swarm Foundation. You're also the founder of Luna Ventures, a Berlin VC fund investing in computer science startups. Welcome, Elad. And last but not least, we have René Andres coming to us from the Mosel Valley. You probably have the best overview of what's happening in the European venture capital industry, because you work as an investment manager at the European Investment Fund, EIF. And the EIF is an investor in other venture capital funds, so like a fund of fund. René's focus is on artificial intelligence, Web 3.0, blockchain technology, quantum, open source, and cybersecurity. I couldn't be, welcome. Welcome, René. I couldn't be happier to be among such a group of competent people tonight, and I will try my best to extract a few trade secrets from this crowd. So let's move right in. Let's see, where is Simon? Simon, let's start with you. What was your best blockchain investment to date? And how did you know at that time when you made the investment?
Thanks, Wolfgang. Hello, everybody. For us, or for me, that's pretty clear what our or my best crypto investment was. It was a French company called SoRare. They are basically doing football trading cards in a fantasy football game on the blockchain. We invested very early in the pre-seed round. And what was amazing in that company is that it took them, I think, 18 or 19 months to go from a pre-seed company to a unicorn valuation, which we haven't seen before, and which I think is only possible in kind of this industry. They're performing well. I don't know if anybody is playing fantasy football or if anybody is playing SoRare, but the interesting thing about that as well is that there's an ecosystem that's forming around these NFTs and the first application of NFTs in a gaming context, which makes us very, very positive about what there is to come. Everything at the beginning looks a little bit like a toy, but you get the first glimpse of what's happening, what you can do with the new technology with these applications, and then we go from there and then see the opportunities. The second question was, how did you know that this would be a good investment, or that this would turn out like that? The honest answer is I didn't. Was actually back then we were starting our first micro fund, and we warehoused that deal. And I remember when I was talking to the first couple of investors, we had 3 deals warehoused, and everybody was stuck with SoRare and said, "This is a stupid deal, Simon." Why would you do that? Like, why would you put trading cards on a blockchain? But we stuck with it. The reason we invested in this early stage is we liked the founder. We knew that he has the right skill set and the right credentials. We knew that investing in a bear market, I think it was 2019, is a good time to invest. You get good valuations and you get the actual builders, not the visitors of an industry. And that's why we continued, or we made the investment. But obviously this investment looked exactly the same as all the other investments at the time we did it. And as Wolfgang said, some turn out good, some turn out not so good. And it's often not the fault of the founder. Like, you invest with so much uncertainty in that early stages, you have hypotheses, and very often they don't turn out to be true. When they turn out to be true, big outcomes are possible.
Thanks very much, Simon. Patrick, what was the investment that most people called stupid when you first looked at it and turned out to be quite good, actually?
I would stick to the same industry, like the NFT industry. I think in there I can think of 2 examples where one of the examples is Venly, which is basically offering infrastructure for the whole NFT ecosystem. And at that point, there were maybe 10,000 people in the NFT ecosystem, and right now it's like several millions. So obviously that company has benefited quite a lot from it. And then another investment that I would briefly like to highlight is gem.xyz, which is basically an aggregator of NFTs, so a bit similar to what OpenSea is doing, but then even bigger, even more aggregation. And there people were saying, like, yeah, really, why are you going to take it up against a platform that is already a unicorn and that is doing huge volumes, like an OpenSea, and that is that has very strong financial backing as well. But simply the team was so impressive, that we decided to back them, and right now they're doing 20 or 30% of the volume that OpenSea is doing. So that's a couple of numbers that I think speak for themselves. So knock on wood that they keep doing it at this pace.
Yeah, we knock a lot of wood as VCs. Olaf, CVC has been in the crypto space for quite a long time, and you're obviously based in Zug, which is the crypto valley. So what was it that you liked about the model of founders of one of your investments that are moving along nicely?
Well, the model of the founders is typically the team and our judgment of their ability to adjust and pivot if things don't go well. So I think that's the one when, in particular, when you're early stage, and we run our own incubator, so we go very early stage, is really, of course, we look at, is it the right idea with the right founders at the right point in time for the right market? But ultimately, it's very much a judge of character of the founders team, complementary skill sets, and an ability to adapt and grow and change if things don't go the right way. We also had a negative experience in that sense where we had one team that actually fully pivoted away, but in the form of a separate company, and all of a sudden we were not invested anymore. So you also obviously get the extreme negative, but generally we have that, and we had some very interesting either pivots or developments in terms of finding new co-founders or splitting up that were very, very positive in terms of the founders. So I would say that it's really down to the people there.
Elad, moving on to Berlin, you've also been an investor, or you are an investor in certain blockchain companies. Can you tell us about what is it that made, and I heard of Molecule as one example, what is it that makes this company stand out compared to others?
So Molecule is a company that we invested in together with Simon, actually, who's on stage. Like a voice from the ether behind you, Simon. So Molecule is a really exciting, so pharma drug development in general has been experiencing an innovation crisis. And I hate to be the Bitcoin solves this guy, but Bitcoin totally solves this. The point of Molecule is, what if you take drug challenges that humanity is totally capable of solving, such as longevity drugs, that there are plenty of candidates, great candidates in the market that for various commercial reasons, existing drug companies are just not incentivized to investigate, and they have this, So what if you take them and you set up DAOs where patient advocacy groups, investors, medical doctors and researchers, and just plain crypto people come, put in money and try to decide together what projects to invest in. So for example, the first of those is VitaDAO, which invests in longevity projects, where there's a group of biologists of longevity researchers that are like the biggest longevity researchers in the world that are deciding where to put the money in the DAO. Right? And then you get patient advocacy groups that try to funnel this for the benefit of everyone, and medical researchers and investors working together to both increase the value of this DAO and also fund this important research. I think this kind of model of participation from various groups is one of the biggest strengths of DAOs, and Molecule is launching more and more of this kind of research DAOs that I think will change the way pharmaceutical research is funded and done.
Okay, so a completely new look at how drug discovery works with the help of DAO and the blockchain. Okay, thanks, Elad. Moving on to Mosel. René, you are in quite an enviable, and I have to look up there, we are quite an enviable situation because you are funding other VCs, so you probably have the best view of the venture capital space in Europe and their returns. Now, I'd like to phrase the question a little bit different to you. How do you recognize a fund that has a potential, a first-time fund that has the potential to strike big in the blockchain space?
Well, I guess it doesn't necessarily come with showing significant financial numbers initially in terms of protocol level investments you might have done. Essentially, it's mostly around the team who has probably found an extremely good connection to that very special ecosystem of crypto founders, I would say, and has made or has shown good referencing with founders in initially finding these interesting companies, hunting also for probably more moonshots than you think. That's one thing. So it's mostly around the team, I would say, and their capability to be connected to the ecosystem and to be ambitious enough to, as Simon said, we are also a big investor, indirect investor in Soraya. I guess when I first saw the opportunity indirectly, I also thought, not sure where this is going. But there were people, first-time teams who see these moonshots, who don't necessarily come with huge track records. But the key thing is, I guess, an understanding for the philosophy of crypto and a deep-rooted connection to that ecosystem and showing that you reference very well. I think that's already fully sufficient. Nobody here comes with a huge track record or anything, and that's actually also not needed.
Have you seen the return numbers and the interim reports for blockchain VCs being better than the traditional VCs?
Yeah, that might be true at a short period of time. I think when you have invested your certain fund a few years ago, and of course we also have funds in our portfolio that have crazy net IRR figures. Is that sustainable? I don't think so. There will be a normalization as more and more people move into that market. But initial movers, there are some who definitely have shown significant outlier returns. And if you invested in again, taking Simon now as an example, in the seed round in Soraya, which we also exposed indirectly. It's a big company, some layer one protocols, if you invested in near very early, and others, of course, you can liquidate your positions now at very nice valuation potentially. But some of the numbers you see, I think, will come down more to a classical venture level over time as competition moves in. But first movers definitely have crazy outlier returns, north of 20x, 30x funds sometimes.
That's quite an impressive number. Now, with new opportunities coming from new technologies, obviously there are also new levels of risk being introduced in crypto investing. Question to one of my colleagues here to my left. Are there any new risks that you see in crypto investing that you'd like to highlight? Olaf?
Well, maybe I start. So first of all, I think the definition of VC is quite fluid within blockchain for a number of reasons. One is I find that a definition of a blockchain fund in a VC fund could be anything from traditional tech VC approach all the way to almost like a hedge fund exposure towards certain crypto tokens, and it's still being called blockchain VC, which all of this are great asset classes, but the risk characteristics are quite different. So that's point one, is when you look at a fund, really try and understand what the investment proposition is. Is it traditional VC? Is it protocols? Is there active trading involved? Is there relatively shorter term exposure involved? So that's one. And then the other clearly is that new dimension, which is, in this technology, you can now invest through equity or convertible into the startups, or through token models, or in some projects into both. And you need to also keep a close eye on the interdependency between the two. So those, for me, are the key two.
If I may add, I think in what's also different in crypto is that you have different kind of risks and you have a lot fatter tails, I would say, because what happens in crypto is you have something like smart contract risk. So if you invest in a DeFi protocol and it gets hacked, the company is basically dead. If you invest in a fintech company and you have like a small hack on the, I don't know, a DDoS attack, then the company is not dead. So I think it's different kind of risks there that we need to look at. The other risk that is we have to deal with is regulatory risk, which is also a 0-1 risk. Like we're invested in a company that works in the US to offer consumers access to DeFi rates, and of course the regulator can pull the plug on that any minute, and the company is basically worth zero. So I think we have to consider that when investing in these companies or in these protocols, in adjusting our upside potential. Upside potential needs to be even bigger because you have these fat tail risks.
Patrick?
Yeah, maybe very quickly, just adding one is everything that has to do with community. We've already spoken about the tokens here. It can be a very strong catalyst for what you do as a crypto company, and the same thing with the community. If you can build a very strong community, it's something that is extremely powerful and can make a company very quickly rise to become widely accepted, wildly successful, and get very wild returns. But on the other hand, also, yeah, it comes with the risk. You need to take well care of the community, and that's, I think, also where a crypto token or a crypto asset needs to be very well designed. So you really need to think about why this token, how do you design it, does it work correctly, and so forth.
Elad, you wrote about token risks some time ago. Can you explain to us what a token risk is?
Yeah, so one of the things I obsess about constantly is token risk, which is specifically the risk that the company or project will succeed, but that the token will fail. And that is actually really common. One of the reasons we haven't seen it as much as I think we will see it is because crypto companies have such a short lifespan so far. There hasn't been lengthy time in order to experience the times where a product really comes to market, succeeds, get a lot of traction, everyone loves it, but the token has already undergone, the token that was originally raised, undergone some, maybe it was abandoned and a new token was reissued, and the original investors don't have any part in the new success. I think this is something investors should always pay attention to, and I think I don't exactly know how to solve except with the legal system, but I'm sure we will come up with some decent ways.
Now, venture capital is always subject to cycles, as with all economical movement. And I've been around in 2000 in venture capital, where there was a winter for like 3-4 years, longer than the crypto winter. So I was wondering how my colleagues here would evaluate the next venture capital years. I mean, there's an abundance of capital being around that needs to be spent. And even if the stock market should crash, this money is still there because these funds are long-term committed. But I mean, with all these volatility in the blockchain space, how do you see the next 3 years in venture capital? Just take a wild guess.
I don't know. I think that's the honest answer. I think we're in a market environment where we are in a very uncertain period. It could either go up again or down. And in the end, like what we're trying to adjust is we have a later stage vehicle which we invest in, and we try to avoid crazy valuations in areas where valuation multiples have come down over the last months. But in our very early stage vehicle, which is our bread and butter business, the pre-seed one, like there's so much uncertainty in the company you invest in. There's so much uncertainty about how the markets develop that it's in German the word is Scheingenauigkeit. Like I can of course try to make a prediction, but it's going to be wrong. So the only thing I can do as a GP is I can try to pick the best founders in the most promising areas where I think technology will develop, and that's what we're doing. Yeah.
Are valuations important in that respect in the early stage? Does it matter if the startup is valued at 5 million or 10 million?
Yes and no. I mean, so it is a bit crazy right now when you look at the general valuation trend, both in VC tech, which is at record highs, and then in blockchain, which is, I think the latest stats from this Galaxy Digital report had at 140% premium to average VC valuations. So it's very, very high. But at the same time, if you believe, which we do, hence we wouldn't be focusing solely on this space, that this technology is the catalyst for a multitude of megatrends for the next 20 years, then, you know, whether I buy it at 5 or at 10 million doesn't matter. So that's why the yes and no, and that's, I think, then down to the actual, all right, so what needs to happen, and in our mind, this is, you know, applications of ultimate use cases in real-world industry, i.e., you know, not just acceptance of crypto as an alternative asset class, which we're seeing more and more, but also real-world use cases from finance to Industry 4.0 to longevity to metaverse, fashion, new forms of digital marketing, all of that, and then it doesn't matter.
Okay, Patrick, in terms of cyclicality, in terms of high valuations, any views?
Yeah, I echo everything that the others have been saying. But then again, if I look at the entrepreneurs for the next couple of 2-3 years, yeah, it's great to know that as a builder is so much capital around. And also what we advise many of our portfolio companies is to take action on the momentum right now and make sure that, you know, if markets turn down, and yeah, knowing that we are at pretty high valuations, you know, never say never. It's probably more likely now than 2 years ago when teams were struggling to get the capital in. Then again, it's a good moment to get a strong balance sheet as a startup entrepreneur. And maybe for us, being investing at the initial levels is definitely interesting. Then. Yeah.
All of you want?
Yeah, maybe one addition. So compared to 2017, which was kind of that other crazy time in terms of valuation, where we consciously didn't choose not to invest yet, because, you know, I mean, 2 donkeys and a goat could raise 50 million with a white paper of 3 pages and then didn't know what to do with the money. So I think the difference today is the founders' teams have matured a lot, right? So it's there's still a lot of young crowd, but we also see a lot of founders team that more experienced founders come from industry, have discovered the technology as an interesting use case within their industry and now to try to apply it. So there is a higher sanity level in the founders teams compared to 4 or 5 years ago, I would say, and a more realistic approach to use that opportunity and take the capital while it's there, as opposed to, I'm having money, I'm going to spend it like there's no tomorrow.
Rene, are you planning any cyclicality in your long-term capital allocation, or do you just say, look, the market price is what it is? I mean, when YouTube was sold for 2 billion, everybody thought this is crazy, and now 2 billion would be the biggest bargain of the history.
I guess at the end of the day, the answer is, I think you cannot time private markets. And if you really want to do venture capital from a fund of fund perspective, you don't really care about cycles as long as you invest long term and consistently. Because who would have predicted 6-7 years ago that we are here where we are now? Same with the .com bubble or other cyclical events that will emerge. As long as you are a long-term investor and focus on people that want to build something new in the world, essentially, and then trust in them, the only thing you need to have is a long-term strategy and not being tempered by, you know, FOMO behavior of seeing nice numbers and suddenly moving into a market and try to time it. It will completely fail on the long run. Be consistent, invest over time, and it will always pay off.
Okay, thanks very much. Ila, do you want to have the last go?
Something?
I'm getting the 1 minute sign in a second, so make it short.
Well, I'll try. So I just looked it up. The current Bitcoin market cap is 1 trillion. Now, I think it is almost certain, I'd say, that there's going to be a cryptocurrency which becomes the reserve currency of the world. I don't know if it's not in 3 years. I don't know if it's in 10 years or 30. And there's a decent likelihood it's Bitcoin. It's the obvious candidate. So I think Bitcoin has another 10x to grow. I think the same is true for generally the area of crypto, right? I mean, who's the decentralized AWS? I don't know, but I know that the market cap of it will be 1 trillion plus. Who's the decentralized stock market of derivatives? I don't know, but similarly, I think there's going to be insane growth in many, many, many different sectors. And by the way, the same is true for VC in general. Technology has been the biggest value creator, and especially digital technology has been the biggest value creator of the last 20 years, arguably more. And I don't see that changing anytime in the foreseeable future. And so I think no matter how optimistic we are, we're not optimistic enough in the 10 plus year horizon. 3 years, it's anyone's guess.
Thanks, Elad. Well, time flies when you're having fun. The 30 minutes are already over. Thank you very much to my esteemed panel members. Thank you very much to the audience for being here at this late hour. And if you have any questions, please reach out to us. We're happy to answer. Thank you.